Hello, you are tuned into the Teacherces podcast. Around these parts, we are exploring generational wealth, creating the home you desire, and of course, we're living our best life like it's golden. The catch is we're going to do this together. Keep it locked right here to the Teacherces podcast. Okay, we are back and you are tuned in to the number one podcast in all of America. I'm manifesting that actually. We're not quite there yet. Hopefully one day. However, you are tuned into the Teacherces podcast. I am your host, Cess. It is lovely. It is 2021. Life, hopefully for you, is going well. So well that you're going to pause and hit that subscribe button. Actually, rewind. You don't have to pause to do that. Hit the subscribe button right now, and a 5-star review is greatly appreciated. Make sure you share the Teacherces podcast, and in return, I promise you, I will keep bringing you the best content that I can. All right. So now that we have gotten that established, let's move on to what is on the mind this week. First off, if we are investing as we should, because remember, we are doing the whole generational wealth thing, etc., we have an issue. The issue is if you are investing as you should be investing, the stock market this week is looking pretty pitiful. Not good. It's bad. All bad. Lots of red. What do? Do you A, pull your money out? B, cry? C, act a fool? The answer is D, none of the above. Remember, we are talking long-term investing. So long-term investing means that you ride it out unless your company is like JCPenney or something like that. Hopefully you're not investing in JCPenney. You probably should ride it out considering it's a standard, reliable company. Now, if you're investing in something that is not a long-term hold, you probably should not be doing that. So I want you to know long-term holds are the way to go in all that we are doing. Now, speaking on that, I'm looking at, all right, let me rewind. About, what month are we in? March. Okay. So the beginning of the month, I had been hearing a lot about NFTs. Now, for those of you who don't know what an NFT is, I actually don't have the acronym right in front of me. I'll go back and put that in the acronym, what it means. But it's how do I explain NFT? It's a very strange concept. It's kind of like a GIF or a GIF or however you refer to that, a non-fungible token. But it's like art. You know what? I'm not going to lie. I have a hard time explaining what NFTs are. It's art. It's crypto. It doesn't really make a lot of sense to me, but to be quite transparent, as I've said before, Bitcoin and all of those, coin currencies, digicoins and all that didn't really make sense to me. And I put my money out like a fool. And now I'm sitting here looking like I'm stuck on stupid. So this year I decided not to be that person. So I've been looking into blockchain technology, NFTs, and how I can invest in that and jump on it before the getting is good, as they say. So with that being said, I've looked into the stocks in regards to NFT. Okay, how can I jump on this early and make some money quickly? And I could be wrong, I could be right. In full transparency, I have not invested in any of these companies yet, but a few of them are pretty tried and true. And I'm like, okay, some of them, let me take example, Square, like Squarespace. People use that merchants use it for their credit cards, etc. Mobile payments, they're involved in the NFT family, NFT umbrella, and their ticker symbol is SQ. So something to think about. I'll give you a few blockchain technology companies. Another one is Visa, and that's letter V. The ticker symbol is V. One is Canaan. Canadian. No, it's not Canadian. I'm sorry. It's CAN. IBM, we're familiar with them. I thought their heyday was gone, but hey, what do I know? Their ticker symbol, is IBM. We have Cyrene Nasdaq Next Gen Economy ETF, ticker symbol BLCN. Amplify Transformational Data Sharing ETF. Their ticker symbol is BLOK. So I've given you some individual stocks, and I've also given you some ETF groups to look at regarding this technology. So trying to explain, like, where am I getting all this blockchain, NFT information? It goes back to, I will give credit to the Earn Your Leisure podcast about a month ago. They had as a guest Mark Cuban, who was explaining NFT, the concept of NFT art, I guess. And I was like, I never heard of it, but I've never heard of many things. So it wasn't like, whoa. And I'm like, all right. Okay. I got you, Mark Cuban. You're rich. You know what you're doing. Cool. And literally the next week they have, same podcast, Earn Your Leisure. Shout out to Rashad and the other guy. You know, I'm always like blanking out, but I know one is Rashad. The other host, his name escapes me at the moment. But the point is, they had on Gary V as a guest. And once again, he was bringing up this whole blockchain, NFT, all that. And I'm like, okay, 2 weeks in a row, two people who obviously know what they're doing are talking about NFT. I need to jump on it, or at least do my due diligence and find out more information regarding this movement. So like I said, then of course, last week they had, Jim Jones, not like the Guyana guy, no, the rapper. He mentions it as well. And I'm like, okay, this is too much coincidence for me. And speaking on that in regards to stock, I'm really, like I said, I've only been investing for the past year. I'm trying to jump on Tesla because I want to own a couple shares of Tesla. The catch is Tesla is going down in, stock value, price, whatever the phrasing you want to use, but it's still expensive. Like, we're talking like $600. I'm like, oh my gosh, $600, that's a lot of money. I can't act like $600 is just a drop in the chain or a drop in the pan, whatever the phrase is. It's a lot of money to me. So I'm like, it's going down. And the whole reason, it's on my radar. Well, it's always been on my radar, period. But Kathy Wood, who's an infamous investor, she mentioned that she feels like it can go potentially up to, what was the number? 2,400 or something, a lot a share. I want to say it's definitely more than $2,000 a share, kind of like Amazon prices per share. In the next, I think her time frame was 3 to 5 years. So it had me thinking like, So needless to say, that's my goal in the next month is to buy. I'm doing it big, not more than, I can't afford more than, possibly five shares of Tesla. Thank you to Uncle Joe who has given us stimulus money, because I'm thinking that's what I will be using. Because if not, I don't really have anything else to use to buy Tesla. And I'm putting a lot of faith in Elon Musk, who I saw him on the Joe Rogan podcast. At least I try to watch it. He's a very weird guy in my opinion. I guess he's supposed to be smart. I'm kidding. No, he's very smart. Maybe that's why he's so weird. And I read a little bit of information about him. It appears that he was born in South Africa, so I'm assuming he's South African. All this other stuff in regards to him. So I'm like putting one and one together, and I'm like, yeah, Tesla's a must as well. A must as well as a couple of ETFs. And yes, I just dropped my pen that I've been looking at. One is ARK, ARKF, ARKG, ARKK, always QQQ. These are ETFs that have major companies in their basket, or at least that's how it has been explained to me to refer to it as. A lot of QQQ has Tesla, Apple, which I've been buying up Apple stock because it's really super affordable. It's another company that is expected to boom in the next 3 years. So they're coming up allegedly, because I don't believe this has been verified with Apple, with an Apple car. I don't know why I giggle when I say that. It's a funny sounding concept, an Apple car. Like I picture a car, Apple on wheels, but it's supposed to rival Tesla's. We see how that goes. So that is my rant for my stock picks of the week. Okay, we are here. So my next rant, if you want to call it a rant, for the week is involving your credit. Like, I want to get into the details about this, but I cannot. The full transparency, my credit rating is dropping when I'm supposed to be, supposed to be rising. I know why, and I don't want to really get into it, but I suspect the issue why it was dropping has been handled, and I expect a complete turnaround. So I'm curious to see how much it will go up and how fast. One of the issues that I can speak on in regards to, cleaning up, I won't even say cleaning up my credit, but what had been hindering me for years, regarding having my credit rating rising was credit card debt. And when I say credit card, it's literally card, like one single credit card. I only own, believe it or not, one credit card. The issue is that the interest rate is fairly high. I wouldn't say super high, but pretty high. And I had been doing an absolutely terrible job. I'm not even going to lie. Terrible job of paying down the credit card. Like I would just pay them. I was one of those people who would pay the minimum. That's it. Nothing else. So yeah, it wasn't going anywhere. And then on top of that, I was a member of Massage Envy for an embarrassingly long amount of time, and I wasn't going in and getting a lot of massages, so I was accumulating massages. That sounds so luxury. And thus it was a problem because I was paying a monthly fee of, I believe it was like $59, $69, something in that, ball frame. And every month I was paying, if the credit card company said pay $20, I would pay $20. And so you can already see where this is going. It's a mess. So the number one thing was to cancel my Massage Envy membership. And even that was not good. Like it was a mess. I went in there and canceled it, and they were like saying, well, we didn't get it. They did. I don't like to badmouth businesses, but I'm going to badmouth a business. Massage Envy, yeah, it took forever for my membership to cancel, and it was no part my doing. I went in just like they advised me to do into the original Massage Envy that you initially became a member, filled out the paperwork, handed the paperwork off to, mind you, the manager, and to make a long story extremely short, despite doing all this, they were still charging me like 3-4 months afterwards. So needless to say, I had a fit. I was able to transfer some massages over to my mom, and they did end up only charging me, no, not even only charging, like ending my membership and paying me back, or whatever phrasing you want, for the months that it kept going. So needless to say, I went off on a tangent about Massage Envy because that really annoyed me. When I was finally took control of that situation, I was able to finally start paying down my credit card debt because, like I said, I was only being charged regularly for Massage Envy, and that was it. I don't use my credit card. I don't. So now I have paid down, drum roll please, I have paid down approximately $4,000 in credit card debt since the beginning of 2021, which is pretty good considering I have so much going on. And I expect the goal is to, by the end of the year, get my credit card debt down to like maybe $1,000, $2,000, possibly pay off the whole entire amount. We'll see, but I kind of come from the school that it's good to have a little bit of a balance on it, but not a lot. So I say this because that was supposed to be my saving grace to rising my credit score. However, there's a situation that I am not getting into on the show that didn't do that, but the situation has been remedied. So I'm hoping that that I'll give it a couple months, hopefully no more than 3, will heal itself and my credit score will bounce right back up. Cause I hate saying cuz, what's up, cuz? Sounds West Coast. But anyway, because, I keep it no secret, I intend on I am a homeowner. I intend on buying another home in the next 3 to 4 years. And part of the goal of that was to bump my credit score rating very high. I wanted to be in the 800s, and additionally save money, which goes back to what I've been doing wrong all this time, is just throwing my money into savings and wondering why I wasn't really saving. I mean, I was saving, but it wasn't impressive. And I've spent the past year learning a lot about investing, and I'm hoping to increase the amount of money I have and my overall net worth, because I've done a little net worth calculation, and I was like, oh, that's cute, but no, I want more of a net worth than what I saw. It wasn't bad. In fact, it was probably decent, but I'm a greedy person. I always want more. Like I said, hustling backwards, I've been realizing so many mistakes and so many things that I have been doing wrong pretty much my whole entire adult life in regards to saving. So I'm hoping what my new knowledge is what I'm sharing with you, because I keep it no secret. I'm not an expert yet. And together we can grow. So there has been a lot of economics talk in this particular episode, which is a good thing. But I feel now is a great time to wind down. So where can you find me? You can find me on my social, of course. I have all my links in the notes in the show. I have made a couple of little pop-up appearances on my Instagram, so that's always a good thing, to be more active on the IG, with the IG community, etc., etc. Perhaps maybe I'll have a guest or two. We'll see. You know how I feel about guests. I actually like guests. It's just I'm very sporadic with when I record. Like I said, I've been pretty good about weekly episodes. My issue is to hunker down and have a very reliable, consistent day I record, which will be a consistent day that I release the episode. That would be lovely. At any rate, you have a fantastic week, and I'll see you again next week. Bye.